So good afternoon, guys. So it looks like only five of you have joined. So we'll start with the refresher class. Am I audible? Good. Okay. So do you want to go topic wise or do you want to go randomly? Guys, do you want to go randomly? Okay. That's one out of five. What about the rest of you guys? Do you want to go topic wise or do you want to go randomly? Looks like it's randomly then. Okay, so ask your doubts. I'll share my screen so in case if I have to write something down, I can write it and explain it to you guys. Yeah, so we can start. First doubt or first question. What we covered yesterday, Deepesh. So let me just pull that up. So, like your mutual funds, you have your investment managers who are the ones who actually set up the portfolio, like your fund, like your sponsors in your mutual fund. Okay, so he is the one who determines the strategies and makes the investment decision, manages the portfolio risk, also is invested in the fund, and he charges a performance fee, but that performance fee is based on a preset benchmark. So let's say if he set up the hedge fund and he's telling you the annual performance of that fund will at least be, let's say, 15%. If that 15% benchmark is not hit, then he doesn't get his performance fee or his management fee. Okay. Then you have prime brokers who sort of act like custodians for a hedge fund. So a hedge fund obviously invests in the securities market, right? So as per regulations, you need a custodian. So that's why your prime brokers act like custodians to a hedge funds, along with helping them to settle transactions. They help in research also, like they give market research. Then you have executing brokers. So let's say if a hedge fund wants to buy shares of a particular company, they might hire brokers. You know what's a broker? A broker executes a deal on behalf of a client. Okay. And then you have auditors. The auditors are required because your auditors are the ones who will bookkeep everything and they have to file an audit with the regulator. Why? So that the regulators know that the hedge funds are functioning within the regulations and there is no misuse of the investments in the hedge fund. Is that clear, Deepesh?
Yes, ma'am.
Okay. So you have three strategies. A hedge fund can be set up as a single fund where they'll just invest in a single type of market. Okay. The sponsor can be a person within the domestic country, or the person can be based from outside the country as well. Okay, the sponsor. The
Ma'am, you are not audible.
Okay. So this next one is your side by side. So what happens in side by side is one this thing is set up in the domestic country, the other is set up in an offshore country. Okay. The strategies that are deployed, in a sense, which markets to invest in, the same strategy that is deployed in the domestic market is also used in the foreign market. Okay. And then you have the master feeder structure. So you have a main fund and you have sub funds that will invest in various markets. It might be onshore or offshore, and all of the profits and all feed up to one fund, which is called as the master fund. Okay, so that structure is called as the master feeder structure, which is a predominantly common structure that is used when you set up a hedge fund. Is it clear now? Saurabh is
Yes,
typing from that
yes, ma'am.
time.
Thank you.
Welcome. Saurabh, what are you typing such a long message, or it got stuck?
No, no, I'm typing the questions.
You're typing the
Just wait.
questions. Meanwhile, rest of you guys, so before you guys joined in the call, I asked, do you want to go topic wise or do you want to go randomly? So only one person answered randomly. So we're doing random questions or from random topics where they're asking questions and I'll answer that. If you want to change it, let me know. We can go topic wise. Financial sanctions. Okay. So basically, what do you understand by sanctions, first of all, Shreya? Shreya, what do you understand by financial or sanctions? Okay, so if you've missed the topic and if you're expecting me to go through the entire topic, that is not possible. Did you at least read what are sanctions? Or did you read the topic? Okay. So basically, sanctions are putting a stop to a certain thing, or it could mean it can putting a stop on doing a business with a certain company or a country or an individual. That's what's a sanction. Now sanctions are primarily passed from one country to another, like passed on to one country from another country. So especially financial sanctions, it would be, for example, if you take India China now. Okay, India has passed sanctions saying that we will not import anything from China. Okay, so that's a type of financial sanction. Is that clear? Okay, so there are various reasons on which sanctions are passed. The globally, even the UN can pass sanctions on countries, and that is for three reasons where UN along with other countries might pass sanctions on a particular country. If one, that country is known for money laundering. Second, if the country is known to finance terrorist activities. and the third is to improve the morality of the country. Ooh, Saurav has a lot of questions, so we'll go one by one. Uh, Ma'am, countries doing sanctions for increased morality. Okay, I'll explain that in an example, Deepesh. So, I don't remember exactly which year, but in South Africa, there was this predominant problem of slavery. So, in South Africa, you had white South Africans and you had the black South Africans. So what used to happen is the white South Africans used to literally, they could kill the black South Africans in broad daylight and they used to not get arrested. It was getting worse and worse. So what happened was the whole country was like, how to explain it? It was demoralizing because they were killing people. I mean, even if black South Africans, they are part of South Africa and they're getting murdered and no one is saying anything and they were being treated as slaves. So what happened was UN with other countries got along and they passed a sanction on South Africa. And at that point of time, South Africa's main source of income was exporting oil. So when they passed a sanction, they said the rest of the countries will not buy oil from South Africa until and unless they abolish slavery. And that's what they did. They passed that sanction. Then South Africa eventually, because it was losing its main source of income, which was exporting oil, they had to abolish slavery. So that's an example of how your country is doing sanctions to increase morality. Is that clear, Deepesh? Okay. So Saurav has a bunch of questions. The first question is, in securities borrowing lending, any specific or all types of securities are allowed to be traded? Dipesh, example for money laundering you can look up online. Wasn't it covered in class as well? Okay, first let me address Saurabh's questions rather. Okay. So in securities borrow lending, any specific or all types of securities, any types of securities are allowed, Saurabh. They are generally classified into two. You have something called as your general securities, meaning these securities are available in large quantities and are very, what do you say, liquid. Okay, so for these type of securities, what happens is usually the lender wouldn't charge a lot on the interest or the lending fee. Are you clear till here? Okay, let me just copy your questions down because then. And then you have securities which are called as special. These types of securities are rare. They are not easily available in the market. So what happens is generally when the lender lends such securities, he can demand a premium lending interest on it. Okay. So that answers your first question. It wouldn't be traded, it will be loaned. Okay. Example for free of payment. So let's say I made a deal with you, Saurav. I said I'm going to buy, let's say, 100 shares of Gazprom oil company shares, which is a Russian based company. Okay. And the total I'm going to pay you for those shares is, let's say, $1 million. Clear till here? Okay. Now, I'm saying we'll settle this free of payment. So, what I say is, first, I want you to deliver those 100 shares to me. When I see those 100 shares in my depository account, and once my custodian has confirmed that they have received those 100 shares, then only I'll release that payment of 1 million to you. Okay? Versus if it was a DVP or a RVP. So RVP would be from my side, a receive versus payment. And from your side, it would be a DVP, a delivery versus payment. What would happen then is, the moment you deliver the shares, immediately my custodian would have released the payment to you. Whereas in a free of payment, it's first you either receive the shares and after some time you make the payment, or vice versa. Sometimes you receive the payment first and then you deliver the shares. Does that clear your doubt? In case of default, there will be an agreement. No, in the agreement, if there's a default, then it will mention what all things you can do in order to either recover the money or this thing. So increasingly, that's why your regulators are pushing for the use of a central counterparty, a CCP. Okay. So regulatory reporting in investment banks, I didn't understand that. What exactly are you looking for? Are you asking what type of regulatory reporting is there in investment banks? Okay, so one definite regulatory reporting is publishing the financial statements. Okay, that is one this thing. Then depending on the country's financial regulator, there will be certain reports that they will have to publish. Offhand, I don't know any because I never worked in regulatory reporting, but definitely one will be the financial statements. Then one of the this thing would be your cash transaction reporting. That is for your AML KYC bit. So any transactions that are over a certain limit have to be reported to the Federal Reserve. Okay, such type of reports. Are you clear on that third question? Okay. Dealer versus proprietary trader. Okay, so let's say you have Goldman Sachs, which is an investment bank. Okay, so what happens is, let's say you have client A. Client A gives Goldman Sachs money and tells him to invest it in the market. Why? Because he wants to make more money, and GS will act as his portfolio manager or fund manager, okay, or fund advisor. Now, on behalf of the client, GS will invest that money in the market. So GS has his own, rather I'll put it like this, trader. Okay. What the GS trader will do is take the client's money, invest it in the market, make more money for the client. With me so far? Yeah. Now, because they've made more money for the client, GS will charge this client at least a performance fee or a service fee or a service charge or something like that for the service that he's provided. Yeah. So let's say from this client, he's made 1 million as a service charge or a performance charge or whatever you can call it. Okay. Now this 1 million is given to someone called as a GS dealer or in other words, he is referred to as a proprietary trader as well. What he does is he takes this 1 million, he'll invest it in the market and make more money for GS. So have you understood the difference between a trader and a dealer or a proprietary trader? Yeah, okay. Now it is legal, but after your 2008 crisis, after your Frank Dodd regulation came into picture, under that you have the Walker rule, which states that either they're going to put a cap on proprietary trading or they're going to stop proprietary trading. I don't think they're going to stop, but they're going to put a cap in a sense. Now, if GS makes 1 million out of the service charge that they makes 1 million as a service charge, that entire 1 million cannot be invested in the market. Maybe 10% of that can be invested in the market. Okay, so does that answer your fourth question? Okay. How reserve requirement of central bank with bank satisfied by overnight lending? I'm not getting this question exactly. Is your question why does central bank have to keep a reserve? Or
No, ma'am. Commercial bank has to keep the reserve requirement as per the RBI.
huh?
So they take loans from the banks in
Huh?
interbank market.
Huh?
So how this overnight lending requirement?
So it's simple as this. So let's say you're a bank, Saurav, I'm a bank. Okay, we're both in India, and as per RBI, we have to maintain a certain CRR ratio and SLR ratio, correct? Out of the deposits that we get on a daily basis. Agreed? So now, let's say I got overexcited. I loaned out most of the deposits that I've got, and now I don't have enough money as of today to show that I've maintained my, let's say, CRR ratio. Okay, which is going to be a problem because then the RBI can fine me. So, in order to cover that deficit, I might come to you and say, Saurav, I want to borrow, let's say, X amount of money for just today. I'll return it tomorrow. So, I'm borrowing it for overnight. You're lending it to me overnight, for which obviously you're not going to do it for free. You're going to charge me an interest on it. Is that clear? Okay. So all of Saurav's questions were answered. Let me see if I miss any. Deepesh wanted an example of money laundering. Okay, I'll give you one example that happened in real life. Do you know what's a senator? Have you heard of this term senator? Yes, no, maybe. Yes, what's a senator? Someone official, that's obviously, yeah. But in specific, what's a senator? You said you heard of the term, so any idea what it is? Or who is it? Works with the US government, upper chamber, yes. And so to be a little bit more, in a more simpler term, how we have state ministers here, you have the same in US, but they are called as senators. They're state ministers for the US states. Okay? So there was this senator who used to get bribes. And what he used to do is he used to break it down into smaller amounts and he used to tell his chamchas to go donate it to one particular charity. Okay, now you know that most of the charities they get donation in cash. Yes or no? Yeah. So charities are one of the main organizations that are used or set up as a front to launder money because their source of income is usually in donations and donations are usually in terms of cash. Now, this chamchas is to go donate this money to this particular charity. Now, what the charity used to do is it was to run an orphanage. Orphanage meaning kids. So, because they had kids, kids obviously used to go to school. So, they used to buy all the supplies, school supplies, and whatever supplies they needed from one particular store. Probably, maybe that store was to give them discount or maybe this thing. And who was to own that store? The senator. So, bribe, which was black money that he got, he broke it down into smaller pieces, which is your placing stage of your money laundering. Okay, donated it to charity, which is your layering stage, because in charities, because most of the donations are in cash, it's difficult to pinpoint where it's come from, right? And lastly, when the charity bought supplies from the store owned by that senator, that was integrating. Okay, three stages of money laundering. All right. If you want more examples, what you can do is you can look up known money launderers. There are some famous ones that are there, and see how they laundered the dirty money or black money. Okay, Dipesh? Okay. So I hope I have not missed any questions from top. Let me just quickly scroll and see which ones were answered. Financial section. Okay, right. Next question. And today we have class till 3:30, so I can stretch only till 3:45 because I have another class after that. What's the full form of ISDA, Shreya? Okay. So basically, this is an organization that gives you the license to trade in the swaps and derivatives market. Okay, especially your swaps market. Unless you have this license, you cannot trade in the derivatives market. Now, the ISDA agreement, which is part of your what stage in your trade life cycle? Exactly. So what happens is after you affirm the trade with the counterparty and you make sure that there is no mistakes in the economic and non-economic details of the trades, then in the confirmation stage, all of this economic and non-economic data of the deal or the trade is drafted into an ISDA document where that will now additionally have the legal language. And what is the legal language? The legal language is nothing but the consequences of what will happen if one party defaults or the other party defaults. Also, this document is sort of a proof that you have entered into a deal with the counterparty. Because, as we know, swaps are traded in which market? The order driven market or code driven market? Dipesh, you seem confused. First you say order driven, then you say code driven. Yes, it's in the code driven market, or in other words, it's the OTC market. So, unlike your exchange, your code driven market is not as highly regulated as the exchange market. So, you need some sort of documentation to prove that you have entered into a deal. That's why the whole is the setup came into place. Is that clear, Shreya? Okay. Next question. Right. Next question, guys. Can we use gold to launder money? You can use your black money to buy gold, yes. But then that gold you will have to keep somewhere, right? If you do, no one would want to keep all that gold at home. Yes or no? Because chances are it might get stolen. So the next obvious thing you would want to do is you want to put it in a bank locker. Now, when you go to a bank and you want to put it in a bank locker, obviously the bank is going to make sort of a list of what all you're putting in the locker for safety sake, right? Now, when they see your earnings and compare the amount of gold that you're keeping in the locker, they're going to start asking questions, or they might have questions in their mind as to where you got so much gold. And if you can't validate, then obvious thing is they're going to report it. Okay. Next question. Next question, guys. Guys, next question. Remember, yesterday I said come prepared with all your doubts or questions that you want to ask. Is that it? Only this many questions and doubts you have? Or do you need 5 minutes to go through your notes and come up with questions or doubts? What about affirmations, Dipesh? Like, are you asking me to define affirmations or explain affirmation? Whole explanation. So, affirmation basically is a stage where you confirm the details with the counterparty. Now, when it comes to your order driven market, technically you don't have a counterparty. The counterparty for you would be the exchange. So, in an exchange trade life cycle, in affirmation stage, what happens is the clearinghouse will send an electronic file with all the details of all the trades your trader has executed on the exchange for that day, with the status of those trades, whether they are matched or unmatched. That's when the affirmation team will then compare that file with what they see on the system to ensure that the trades are okay for settlement. Are we clear with the affirmation stage in your exchange trade life cycle now, Dipesh? Okay. So affirmation stage, yeah, you can say even in exchange we have it, but we refer to it as a confirmation stage because we don't have like a specific affirmation stage. Okay. In your OTC market, what happens is now you have to compare the details of the counterparty because you know the counterparty. So what happens usually is there is a matching platform provided by the depository where once your side, let's say the trade undergoes your capture, enrichment, verification, validation, etc., the details of this deal will be sent to that matching platform. Simultaneously, a counterparty will also send the details of the same trade to the matching platform. Now, what that matching platform will do is it will compare the details. If the all the details are matching, then it will show a status as matched. If some details are not matching, then it will show status as unmatched. If you had to manually sit and affirm every trade, you'd go mad because in a day there will be more than 1,000 trades. Is this clear now? Okay. So Jackson's question was, will derivatives actually raise capital for a company? Okay, Jackson, Annette, I'll get to your question in a moment. Okay. Jackson, can you tell me what's the definition of a derivative? Jackson? Vipur gave the definition, but I wanted Jackson to tell me. So where is he? He just asked the question and disappeared. Value of is derived from an underlying asset. Okay. Now tell me, how does a company raise capital? Let's say if it is company A, understood. Then will you explain now if your derivatives can be used to raise capital? Dipesh says no, I think, ma'am. Contradictory sentence. Jackson, can you explain now? Can derivatives be used to raise capital?
Yeah, ma'am. Can you hear me now?
Yeah, I can hear you. So you're saying it
Okay.
can be.
So,
Hmm?
my confusion is actually derivatives makes money, right, for a company. So that happens for a capital appreciation.
No, derivatives makes money for investors, not to the issuer. Okay. To answer that question, people, let me put it in a simple way. You all know a derivative is an instrument that raises its, or sorry, a derivative is an instrument that derives its value from an underlying asset that already exists in the market. Does everyone agree with this? Yeah. Now, hypothetically, let's take company A. Company A issued bonds in the market because it wanted to raise capital. So they did it in which market? When they issued the bonds for the very first time in the market, which market did they do it in to raise capital? Primary, exactly. Now, after that, when the bonds are bought and sold, it is in which market? Secondary. Correct. Now the bonds are existing in the market. Yes. Now, based on those bonds existing in the market, we can have a bond futures on company A bonds because they're existing in the market, which is a derivative, bond futures or bond options. Now, let's say company A didn't issue bonds, didn't issue shares in the market. Can we have any type of derivative based on that? On company A is this thing? If they haven't issued anything, no shares, no bonds. Exactly. Now, understand, to raise capital, you have to issue shares or you have to issue bonds. Correct? For a derivative to exist, an underlying asset should already exist in the market. So, your derivatives, if there's no underlying asset existing in the market, it cannot exist a derivative. Okay, so derivatives are primarily used for your speculation, hedging, and arbitrage. Does that answer your question, Jackson? Now, okay. And its question was, what are matching platforms? And it matching platforms are nothing but an electronic platform that's an extension of your depository. So that's where your parties would send trade details to get it compared to ensure that there is no discrepancy.
Hey, ma'am, but so is this from the custodian side or the clearinghouse side? So who's actively involved in the matching process?
It will be your custodian because you have to instruct, the IB will instruct the custodian from which client's account the trade is going to be done, right? So they
Yes.
send all the details first to the custodian and then the custodian will send it to the matching platform.
Okay.
Okay,
Okay,
because
ma'am.
your
Thank you.
custodians work closely with the depository as well, correct?
Mm-hmm.
That's why.
Okay, thank you.
Okay, no problem. Dipesh's question. Dipesh, you have a lot of questions. It's okay. Ex-dividend date, record date, payment date, which is all part of which, or these are dates that are part of which process? Merger with election. You're not incorrect. You're correct in a way, but yeah, it's part of corporate actions. Okay. So, why do we require this date is because, let's say, for example, company A makes an announcement. Today is a holiday, so I'll take tomorrow. On 31st August, that they are going to pay dividends to X shareholders. Okay. So the announcement date will be 31st August 2020, the day the company makes the announcement of what type of corporate action they are planning to do. Okay. When they make this announcement, they'll also make an announcement of something called as record date. Where record date, let's say in this example, they put it as 30th September 2020. Okay. Record date is the day the company, or in this case, company A, will find out who all are the shareholders. Why? Why will they do this? Exactly. Because they have to pay dividends to their shareholders. So they also announced something called as a payment date, meaning the day they would pay the shareholders the dividend. So let's say we put that as 6th October 2020. Now, out of all of these, this one is the most important one, which is called as the ex dividend date, or for short, it's also referred to as ex div date, which is usually 2 days prior to the record date. Okay. So in this case, since the record date was 30th September, the ex dividend date will be 28th September 2020. Okay, provided this is a business day. Now, who does the company pay the dividend if the shares were sold between these dates? Right? So, to remember that, you just have to remember these two sentences. If seller sells after X div, he will receive dividends on payment date. Okay. If buyer buys before X dividend, he will receive the dividends on payment date. So let's say, for example, Deepesh held shares of company A, okay, and he sold it, let's say, to Annette on the 1st of October. Now, as of 6th of October, who's holding the shares? So I'm going to repeat it. Let's say Deepesh held shares of company A, which declared dividends. He sold the shares to Annette on, let's say, the 2nd of October. As of 6th of October, who's holding those shares?
Annette.
Annette, yes. But who receives the dividends on 6th of October?
I'm me.
Exactly. Because why? You sold it after the ex dividend date. Now, if you sold it to a net, let's say on the 15th of September, then on 6th of October, now Anet will receive the dividends. So are we clear with what is ex-dividend date, record date, and payment date? Okay. This might slightly change depending on the type of corporate action you're doing. So let's say if it is a merger, then you wouldn't have a payment date as such. You would have something called as an effective date, meaning from this date the merger is in, or the merger has happened, and now these two companies are one company. Okay. Right. Next questions. So, to explain Basel, Basel is, hang on, let me just pull up the thing for Basel. I have it here somewhere. So you had Basel 2, right? Right. So what does Basel 2 say? Minimum capital requirements for addressing risk, supervisory review, and market discipline. So in terms of operating operations risks, Saurav, we could say the banks are asked to maintain a minimum capital at all times. Okay. Also, there should be a supervisory review on a regular basis, and obviously don't over invest in the market, because if something goes wrong, then all of the money is gone. And whose money that is? The people who have deposited the money in the banks. Okay. Basel is predominantly used for banks that are accepting deposits, right? It's a regulation followed by your banks that accept deposits. Okay. Does that answer your question? Okay. Next question.
Ma'am, going back to Jackson's question,
Mhm.
so can't other companies, say can't company A use company B's bonds or equities as an underlying for a derivative and use it for capital?
No, they won't use it for capital. They will use it as an investment, meaning if they have money and they want to invest it in the market, and let's say company B has bonds in the market, so they might enter into a bond futures based on company B's bonds. But it's not raising capital again. Raising capital
Okay,
will only happen in the primary market.
okay, got it. Thank you.
Yeah. Yes, making money out of the contract, Shreya, but it's like an investment. Next question.
Ma'am, can you hear me?
Yeah, tell me.
Uh, there is investment also. There is capital appreciation happening, right,
Yes, but capital
for the company?
appreciation is not as raising capital, Jackson. Raising capital, the what's the whole fund of raising capital is okay, I want to expand. I need money for that. That's why I'm raising capital. Whereas capital appreciation is, I have, let's say, I have some money with me. I don't want to put it in the FD because the return on FD is very less. So I might as well invest in the market. So, okay, let me buy some shares. I bought some shares of, let's say, 100 rupees each. Now, after 1 week, the share price has gone to 120. So that is capital appreciation.
Okay, got it.
Annette, sorry, I didn't get your question. So they can use it as a WC and such. Working capital. Derivatives again are not used as working capital uh, and it again your
Not
derivative.
a derivative as such, ma'am, but the profit you make out of the derivative contract after getting into it and upon
Yeah,
maturity, the profit you make out of it, that can be used as capital,
yeah,
maybe as working capital as such stuff,
yeah,
right?
yeah. That you can do.
Oh,
Once whatever profits you earn, how you use it from there is up to you. Whether you want to use it as working capital or whatever else you want to loan it out to someone, anything.
yeah, the profit's not the derivative instrument as such.
Yeah. So
Yeah.
if you're investing in a derivative, the primary reason you're doing it either to you're speculating or you're hedging to cover your risk on an investment that you've already made, or you're doing arbitrage trading, which is buying low in one market and selling high in the other market. Okay. Next question. Out of topic in what sense, Vibhor? Okay. Saurav, I'm not apart from accounting, so I won't be able to answer that question. What does Olga mean? So yesterday Deepesh was wondering what does Olga, and the both wants to know what's the meaning of Olga. It's some. It's I think it means holy or something like that. I'm far from it, but yeah. It's just that my mom wanted a name for Mo because my siblings were also named with O's. So when I came by, she also wanted an O. So yeah. And you answered with an O. Okay, so from the topic, any questions? We still have a lot of time, folks. And this is your last doubt clearing session before you have your mocks and everything, which is conditional for your placements, by the way. Either you guys understood everything or you not understood anything. So I'm getting a bit worried here. So if you don't have any questions, let me know. If you have questions, let me know. What is the format for the next test that will be conducted? Is it oral or written? So you have your final test will be your MCQs, I think, which will be on your LearnTron. But in this thing, you will have a final mock, so that will be oral. That's not a written this thing, so. Great questions, guys, or doubts? Yeah, actually, I'm from Mangalore, but yeah, working in Bangalore. What is the relationship between YTM and interest rates? They're directly proportional, Shreya. So your current yield, your yield to maturity, and your interest rates are all inversely proportional to the price of the bond. Okay, so they're directly proportional to each other. So if the interest rates in the market goes up, then the yield to maturity also will go up. Next question. So Jackson, the reason why a person would issue a buy notices. So let's take an example. Let's say if you're an IB and Shreya is an IB and you've made a deal on behalf of your client to buy shares from Shreya and whoever her client is, let it be. So the deal is, let's say you agreed to buy maybe 100 Facebook shares at a price of, let's say, $5 million, a total amount of $5 million. With me so far? Okay. So let's say she promised to deliver the shares to you on the 1st of September. Now, 1st of September comes along. She has not delivered the shares to you. So it's a failed trade. Okay. Now you urgently want the shares. Since you already made a deal with her, you're waiting for the shares to be delivered from her. Since she failed to deliver, you might give her a time of, let's say, 2-3 days for her to still settle the trade. If she still hasn't delivered the shares, then you might issue a buy notice. Is that clear? Vice versa, if you were selling and the counterparty is not taking the shares in, you might issue a sellout notice. Does that clear your question or your doubt? So the notice is sent after settlement date has passed? Yes, most definitely. Okay. Sometimes what happens is in the certain markets, you don't even have to send a notice. it's a regulation, or as per regulation it is known that within, like, let's say 2 days after the settlement date, if the trade is still failing, then the buyer doesn't have to issue a sellout note, I mean a buy notice at all. He can go buy the shares in the market and then send the notice. But yes, it will be always after the settlement date. Again, I'm going to repeat it, Jackson. Shreya had to deliver 100 shares to you on the 1st of September. She didn't deliver it. You waited maybe for 2 more days. She still didn't deliver the shares to you. So now you want the shares urgently. So you send a buy-in notice telling her that she's got maybe till 5th of let's say 8th of September to deliver the shares to you. If she doesn't deliver the shares, then you'll go buy the shares in the market. And if you end up paying more than what you've agreed, like the agreement with her was 1 million, right? Was it 1 million or 5 million? I forgot. Let's say 1 million. And let's say you spent 1.2 million to buy those 100 shares. Then the difference of 200,000 Shreya has to pay to you. And it will be mentioned in that buy-in notice. Clear now? Vice versa is sellout notice, but the difference is if you're selling in the market and you sell for less than the agreed price, then the buyer has to pay the difference to the seller. Yeah, I was getting to that, share. So issuer would call back the bonds if the interest rates in the market fall uh, below the coupon rate on the bond. So what will happen is then the issuer would end up paying more interest to a bondholder. So in order to avoid that, the issuer might call back the bonds and then reissue bonds with lesser coupon rate. Or even Vibho's got the right answer as well. Okay, but they can only call back the bonds. Those are which type of bonds, by the way? They can call back only if they're issued as callable bonds. Yes, correct. Only as a callable bond. Next question. So LIBOR and MIBOR are nothing but interbank offer rates. What are interbank offer rates is, little earlier we were discussing something called as interbank lending, where one bank loans money to the other bank. So the interest that they charge on that money is called as the interbank offer rate. Okay, so MIBOR, or your Mumbai interbank offer rate, is a predominant interbank offer rate offered in India. Okay, LIBOR is your London interbank offer rate, which is offered in the UK market, but it's also used as a benchmark on the global markets as well. But that's become obsolete now. So, how does growth of mutual fund provide return to investor? If there are more and more investors buying into the mutual fund, that is more influx of money. That means that more money can be invested in more markets, and usually markets where that provide, if it's a balanced fund, so it will be a mixture of fixed income and equities. So your equities is considered as a high risk, high this thing. So that's how you could say that your mutual fund provides returns to your investors. Depends on, again, the type. Are you looking for an aggressive growth? Then you would primarily invest in equities. If you're looking for like a fixed growth, then you would invest in fixed income instruments. If you're looking for short term, then you look into money markets. Okay, we're good.
No, I'm asking that there are two types of mutual funds. One is growth and one is dividend. So when we invest in a growth mutual fund, how does it provide returns? That is the NAV grows or what? Because in dividend we get returns, but what happens in growth?
In every mutual fund there is a return, right? It's in when you talk about your dividend mutual fund, it's not just the dividends that you'll get as a return. Based on how the fund is growing, the money in your mutual fund account that is there, if it increases in a certain level, you can withdraw also from that account.
Okay.
So it's based on the schemes also that are set up. But as a whole, the fund will be set up when they are setting it up. They will plan whether they want to set it up as an aggressive growth fund, meaning very fast. Then it will depend on the investments that they make, whether they'll primarily invest in equity market in that case.
Okay, man.
Next question. Repo is primarily done between banks, okay, and it's generally not over collateralized, whereas stock borrow lending is done between institutions, between banks, hedge funds, investment banks, etc. And the primary reason, and in the stock borrow lending, it is always over collateralized. Okay. And repo is done because there's a short term deficit of cash and you want to borrow cash for some short term reason. That's why you do a repo. Whereas stock borrow lending, it can depend on various reasons. Like, let's say if there's a failed trade, or if, let's say, you've borrowed stock from someone else and you have to return it, then you borrow from another person. Okay, Jackson? Next question. So, what is novation, Shreya? Where have you heard this term? Yeah. So, what happens is, novation is when the clearinghouse will step in and act as a seller to a buyer or a buyer to a seller. So, for example, let's say if you wanted to buy shares of a company and you put the order on the exchange, and the exchange matched your order with the seller. Now, when it comes to settlement time, what has happened is, let's say the seller has not kept the securities to transfer, or for the clearing house to transfer from his account to your account. So, in a sense, the seller has defaulted. That means you, the buyer, would not have received the shares. Yes or no? Yeah, but in this case, now what would happen is the clearing house will step in. What it will do is, what money the seller has kept in the margin account, it will take that money, go buy the shares, and deliver the shares to you. So that way, your trade gets settled now. That's why in your order driven market, if your trade is matched, your settlement is guaranteed because you maintain margins. Is that clear? So that process where the clearing house steps in and acts as a seller to a buyer or buyer to a seller is called as novation. Next question. Did I miss any questions in between? Hopefully not. Hi. Please give little insight on options trade both in exchange and in OTC. So, let's say, Jackson, I want to enter into an options on Reliance shares, and let's say I'm speculating that the share price is going to go up. So I find a counterparty who's obviously speculating the other way, and from my side, I enter into a call option, and I'll be a buyer of the call option. So, in a sense, I'll be the holder. So, I'll have the right to exercise or expire the option. Agree? Yeah. So now, let's say if I've entered the long call option for a European style, and let's say the settlement date is 30th of September, that means the chance I get to either exercise or to the chance I get to exercise the option is 2 days prior to the settlement date, which is 28th of September. So come 28th of September, let's say the market price is less than the strike price. Now, as a holder, will I exercise or expire my option as a long call? You want me to repeat it? You want me to repeat it, Jackson, what I said, or you're thinking about the answer?
Ma'am, market price is less or higher
Mar-
than the striker price?
Market price is less than the strike price.
So it is expired.
As a long call?
It is expired.
Okay, does everyone else agree with Jackson's answer? He said he'll expire, meaning he'll buy from the market. Okay, Vibor also agrees with Jackson. Rest of you guys? So I said it's a long call, and I said on the exercise date, which is 28th of September, the market price is less than the strike price. So would I exercise my option or would I expire my option? So Jackson says expire, 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 expire. Okay, correct. So we'll expire the option because the market price is lesser. So now what will happen is on settlement date, I'll just pay the premium to the writer. Is that clear, Jackson? So that is OTC market. Now, if I'm doing it on the exchange, first of all, the number of underliers that I can do a call option on is standardized because it is done on the exchange. The exchange will stipulate per contract how many underliers I can have, or in other words, it's called as lot size. Okay. Also, for your options, the settlement date will always be the last Thursday of the month. So your chance to exercise the option, they usually follow a European style. So it will be 2 days prior to the listing. So you will have to make a decision 2 days prior to the settlement date. In this case, though, you wouldn't know who's your, what you say, seller or who's your counterparty because it's done on the exchange. Okay. Next question. Next question, folks. Next question, guys. We still have about 37 minutes. No questions? Ran out of questions? So yesterday's class, the recording is converted, so I'll send it on to Sadaf. He'll upload it into the folder that you guys normally would access for your recordings, okay? So any more questions? Do you want to maybe just run by it? Okay, all doubts, please tell us about investment. Saurav, I saw, I think you did a little bit of investigation in between class, if I'm not mistaken. Correct? So Saurav has been a busy bee. When we were taking class, he quickly got onto LinkedIn and he searched for me. Okay, so we'll leave that till the end. Any other doubts on the topic or the domain? Yep, before you're right. Saurav, your true calling is detective work. Right, guys, any more doubts on the topic or the domain? Or do you want to quickly run topic wise? If anything triggers, you can ask your doubt. Is that okay? The board is done with doubts.
Ma'am, I have a question.
Uh-huh.
Can these preference shares convert into equity?
Only if they are preference convertible shares, not any other type of preference shares. Only if they're preference convertible shares, then only it can be converted into ordinary shares.
Okay, ma'am. Thank you.
I guess so. Most of the people, I think, don't have any doubt. So let's answer Saurav's questions. Saurav's question about what's it like uh, to work in an investment bank. So the roles you guys will be primarily hired for is the core operations. So again, it depends on which department you fall in. So let's say if you fall in the trade settlements department or the trade management department, then you'll be responsible for your affirmation, confirmation, settlements, and reconciliation. Let's say if you fall in the client onboarding department, then you'll be responsible for your AML KYC checks, ensuring that the client has submitted all the relevant documents and ensuring that they're not into money laundering before you have your traders start trading on the account using their money to trade. Um, Then you have something called as the portfolio control team. Now, depending on various IBs, there might be different names for the different processes that they, not the trade life cycle process, these other processes. Like there's one called portfolio management or portfolio control. So that doesn't mean you get to make investment decisions on the client's money. It's more of on a monthly basis, you would cross check the client's accounts to see what all trades are executed. Are those reflected, settled? Then, if there's any mismatch in the total amount of money, find the discrepancy. Then you have your what's the team? I forgot the name for it. Then you have your mergers and acquisitions where you might do the core office functions like documents collection. That part usually doesn't sit in like your India and all because it's mostly a middle office and front office function, mergers and acquisitions. Um, If you're doing stock borrow lending, again, you'll fall into the settlement side of it, ensuring that the stocks that are borrowed or loaned are bought in or delivered out, ensuring that the collateral is collected on time. So that's some of your roles, Saurabh, to answer your question. According to me, which would be the best department to work in? Uh, I'd say any. It's all dependent on how you perceive the work is and how you do in the work, right? Um, I'm a bit biased in terms of I liked core operations because that's the start of everything, or like that's the heart of everything. Again, Shreya, what do you mean by quality of work? Are you looking for where if you just go to the office, sit down, don't do anything, and come back? Then that will be like government jobs, right? If you're looking for investment banks, again, it depends from bank to bank. Now, you all must have heard of the term smart working. So, if you work smart, you can finish your job within the stipulated time. But obviously, when it is peak season and all, you might stretch. Um, but then the bright side of it, the pay is also pretty good in your captives, right? I mean, I used to average, there were times when I used to finish my job in like 4 5 hours, and then I used to just look for around till my manager noticed and he gave me like some projects to work on. Uh, there are times when the season and the peak season and trading volumes have been quite high, where I have averaged about 13 14 hours a day. Right, there was one funny instance I remember. So I had a colleague who used to work for the Japanese trade settlement this thing, and her shift used to start at 5 in the morning and end at around 3 in the afternoon. So like when I came into work at around 3, I told her hi, and next day when she came into work, I was still in the office at 5. So I told her hi again. So it depends, like I said. So some people, not to hate to burst your bubble, people think that working in investment banks is like some status symbol or something. It's not. It's just like any other job. It has its ups and downs. It will have your politics involved, everything. Right? It's just the way how you take it and how you decide to grow. Okay, no problem. Any other questions? How many of you think you need to have like a finance background to join a IB operations? Do you think it's necessary to have a finance background? No, it's not. Saurav says no. What about the rest of you guys? I think so. Vibhav says depends on the person also, is Shreya's answer. In fact, you don't need to have a finance background. I'm from a science background and I got into an IB just as easily. right? And it's again based on your speed of understanding, Shreya. So one suggestion I would give is when you join an ID and you're put in a particular process, obviously these guys follow something called as a buddy system in their teaching. So what happens is when your buddy teaches you how to do a particular process, I would suggest you keep a book, write down each and every step that they explain. If you have to draw the icon that they click on to open an application, draw that in your book and write double click also under it. Everything, right? So, and ask questions, okay? But don't ask them so many questions that they'll get irritated. But yeah, ask questions, write down the answers, okay? And then when eventually you start processing by yourself, that book will become your Bible, Gita, and Quran, right? And let's say you're processing and you come across a new problem or a new this thing you don't know the answer for, ask your buddy or trainer how to resolve this problem. Now write that problem in your book and write down what the steps you took to resolve it. So next time a similar problem comes, first refer to your book and see if you have faced that problem first and what is the resolution you had for it. Okay, then eventually that your dependency on the book will reduce once your time span in the process increases. Okay, in these guys only or rather your IB looks at only two categories of people. One is your English or your communication is excellent, your domain knowledge is average, or your domain knowledge is excellent and your communication is average. These are the types they're looking for. If you're excellent in both communication and domain, then you're a sure shot you'll get selected. Right? So for that, you guys need to be prepared at all times. So you need to be preparing your domain answers. You need to be preparing your HR question answers as well. Okay. Any other questions? Not all PCM students are hardworking, Vibhor. Right, folks? Any other questions or are we done? Okay, Shreya and Saurabh are done. What about the rest of you folks? Only few guys on this call or on this session asked questions. The rest of them took a back seat and just logged in to get attendance, I guess. So let's see. Annette asked questions. Anurag, no questions. Arpit, no questions. Deepesh asked questions. Jackson asked. Kamika asked one question. Rahul, no questions. Sakshi, no question. Shreya asked. Saurabh asked. Vibhor asked. The rest of them are just on the session and disappeared. Right. If there's no questions, then good luck to you guys. please prepare on a daily basis and be interview ready at any point of time. And good luck for your mocks. Please score well in your mocks. Okay. So your mocks will be a mixture of your domain and your resume or resume based questions. So on your resume, if you guys have any gaps, be prepared to have a good answer as to why you have that gap, right? And people who are from usually from the engineering background, uh, be prepared to answer questions like you're from engineering background, why do you want to switch to a finance background, right? And obviously, yeah, study your domain. Okay, so good luck to you guys. Hopefully, all of you will get placed soon as well. Okay, so I'll upload or I'll give this video to Sadaf as well, and he'll upload it on the required this thing and send it to you guys. Okay, so enjoy the rest of your Sunday, but then get serious back on Monday and start studying. Okay, folks. Okay, then have a good day. Bye.